The markets have been really quiet recently, but that could all change after the bell today because we get Nvidia earnings. And these are hugely important to the financial markets, whether you trade indices, commodities, gold, whatever. Nvidia earnings have kind of set the tone in recent years for the broader market. So let's talk about how it could impact the charts tonight. The stock market has been on a tear since those April lows. And what's interesting here is we do see the stock market kind of consolidating over the last few weeks. This is the NASDAQ, and you can see really from July until now, yes, we've had a little bit of gains, but it's been mostly back and forth chatter here. And Nvidia earnings has the potential to completely change things up to the upside or to the downside. Now, of course, AI, the big kind of market moving factor, is built on the back of Nvidia earnings. Here's a look at Nvidia, ticker symbol NVDA. And this stock, again, represents the AI revolution by itself pretty much. If everyone is out there buying Nvidia chips, again, the thing that they sell, semiconductors and things like that, right, then the stock market believes, okay, there's a return on investment coming and there's money flooding into other companies. And again, it is sort of a stimulative sort of thing to the entire market. But if there is any disappointment, this could seriously cause the market to become more volatile than it currently is. And while I don't usually use it on this channel, we're going to pull up the stock box here today because this is so critical. We've got Nvidia selected in the top right. What we're looking at is the earnings report tracker, which shows historically how Nvidia earnings have come out relative to expectations. And what you can see at the bottom section here is our earnings surprise chart. And the last 4 reported earnings, Nvidia has beat each time. Let's take a look really quick at how Nvidia has traded and the market has traded post Nvidia earnings. If we go back to the previous earnings report, you can see we did trade slightly higher, but it wasn't a huge move up. If we take a look here, Nvidia earnings did come out and the market sold off. By the way, they came in better than expected, but the market still sold off. Again, earnings came in better than expected and the market sold off. And here is another instance where Nvidia earnings came in better than expected and the market sold off. Why is this happening? Well, the reason it's happening is because this stock is so loved and so eagerly watched that people's expectations are massive. And so yes, while the stock was beating earnings, it really takes an incredible beat to get the market really excited. It's not enough anymore for stocks to just beat their earnings estimates. You have to really rock the market. And so that does make me a little bit nervous for how this could impact the markets. Unless Nvidia puts up some rock star numbers, we could see a little bit of turbulence in the coming days. By the way, the earnings report tracker and a ton of other data can be found within the new stock box. If you don't have a copy of the stock box and are interested in stocks or indices, this may be something for you to check out. I'll leave a link in the description, or you can speak directly to our support team using the first link in the description below. And so diving into some technical analysis on the NASDAQ ahead of the big Nvidia earnings, well, let's take a look at what we're sitting with. We've got a situation in which we have supply up ahead and we have support down below. In fact, we also have support around this area here now. So we've got support below, resistance ahead. And I do think that when it comes to the Nvidia earnings, you have the potential for a sharp move in either direction. There's been many times where Nvidia earnings can cause the market to steeply sell off or steeply rise. And so I wouldn't be surprised if after the bell today, when we get the Nvidia earnings, you get some sharp movements. And it may actually lead us to our next move in the market. Again, it is that important to the market what AI and all of the respective companies in AI are doing and projecting. So what I'd look for is if you are a technical bull on the NASDAQ, let's see if we can get a breakout on some strong earnings from Nvidia, which could signal another wave higher in this stock market and may actually give us fuel to say, okay, the stock market's kind of been choppy back and forth. This breaks us to new highs. Or if you get something disappointing, it is very possible that our next leg of support could be found around 23,000. And the bigger question would be if it's bearish enough, if we get enough disappointment on the AI kind of trade, that you actually could see the market start to break formation and maybe even turn down, which I believe the stock market is a bit expensive. And so I am very cautious as I go into the Nvidia earnings report. And you guys know on this channel, I keep you up to date with trades that I am in. I just took a silver trade. And by the time you see this video, this thing could have moved against me or moved in my favor. But I do want to reiterate that I am now in a silver silver long position. Part of the reason here is that it is a top setup within the EdgeFinder. We have a 13 score, which indicates that sentiment is polarized in a way that looks bullish for silver, meaning retail is likely more bearish while institutions are accumulating longs. On the technical side, we do have clear momentum to the upside on the daily chart. And if we take a look at the economic score, which we'll look at in more detail in a second, I think this heavily favors silver and gold. Metals look attractive as we deal with high inflation and slowing economic data. To get a little more under the hood, let's take a look at the US economic heat map. So taking a look at the economic heat map here, what we can see is that we have a lot of stuff that is coming in pretty soft for the US dollar and for US stocks too, which is essentially, long story short, if you want to go line by line here, feel free to pause the video and understand this better. But when it comes to jobs data, we are generally seeing weakness there. And when it comes to inflation data, we are still seeing some stickiness on that side of things. That combination, I think, is a little bit alarming and could cause a rush or demand for alternative investments like silver and gold. Taking a look at silver on a daily chart, this thing to me looks poised for a breakout through those highs. We've come back and tested near there. I think we are headed back towards those highs and potentially beyond if we do continue to see that kind of trend in the economic data. Slowing economic data plus sticky inflation, in my opinion, looks really good for silver. So I know a lot of people are going to be wondering, well, Nick, why'd you take a silver trade? Why not trade gold? Gold is better, right? Well, of course, gold is also something I love to trade, but the consolidation phase here is just not as attractive to me on metals. You know, if I'm gonna trade something, I want to trade something that has a little bit more movement to it. And gold has been really stuck in a range. While I'm still bullish on gold, I'd be looking for the confirmation breakout and then looking to add into a pullback or a move back towards the bottom end of this consolidation range before taking any trades. But in the middle of this, I'm not so interested. When it comes to silver, when we pull up the 4-hour chart here, we've got a pullback into a level of support following that big Fed Day announcement and a chart on the higher time frames that is trending more decisively than gold, at least in recent times. For example, take a look at the gold to silver ratio, which is a measurement of the price of gold versus the price of silver. And we can see that there has been a decisive shift in the bearish direction on this chart, just telling us basically that silver is performing better than gold. Remember that this chart shows you if gold is if silver's really strong, gold on a relative basis is less strong or even bearish. You can see this chart kind of trend in one direction. I think we may actually be seeing a bigger term kind of reversion back towards the low end of this longer term range on the weekly chart. And so to me, I actually think that silver is the better buy at this time. Because I'm in the US, I ended up taking a trade on ticker symbol SLV. This is a silver ETF essentially that I can trade here in the US. I could also trade silver futures, but I just prefer trading ETFs personally. And so I've got a stop below structure here. Same trade, just on SLV instead of the spot silver price. And I did take a pretty good sized position. I went long 5,800 shares of SLV. So there is, around 200K invested in silver. If this thing rolls over, I will take a controlled loss and move on to the next trade. And by the way, this trade was shared inside of our VIP Discord service. Yes, we offer a signal service, but as you just got done seeing, these are trades on real live accounts. This is my hard-earned money that is being put on the line in front of an audience as well as within our service. If you are a serious trader and looking to join a service where you can actually learn and see traders really placing real trades on the market, whether they're winners or losers, you can consider joining our VIP service. The first link in the description down below will connect you, if you click it, to a person on my staff who can give you some more information about memberships if you have any questions. Or you can go to our website, a1trading.com/VIP. On this page, you can explore the full list of features that come with the group. It involves trade signals, coaching webinars, strategies and guides, and of course, an interactive trade tracker where you can see my trades in detail throughout the week. And here's a preview of what that trade tracker looks like. If you're a gold VIP member, which is our lifetime membership group, you get access to every trade that I'm in, every stock that I'm in, all of the Forex trades that I'm in, my silver trade, etc. So if I make any adjustments to this trade, close it out, trail a stop, take profits, etc., I will of course update inside of the VIP group. And if you message us, if you stuck through my advertisement here, I'd love to have you join the Discord, genuinely. And if you have any questions or you would like some extra discounts, send us a direct message using the first link in the description down below. And so coinciding with my long position on silver I do think the dollar index is starting to look a little bit stretched here this morning as it recaptures kind of all of its lost ground from the Fed meeting. I thought that was kind of interesting. And so when it comes to the dollar index, I am still pretty bearish on this overall. I do think that we're going to get interest rate cuts in the United States, but my concern is that we may not get them for the reasons people are thinking, or at least they might not be as clean cut and pretty as people are thinking. That is why I am long silver and watching for long positions on gold as well. I think there's a possibility that with high inflation and sticky jobs, we do see rate cuts, but that the bond market is still freaking out about what's happening with inflation. And so it could be rate cuts that come in fast and heavy, and people are kind of terrified of what is coming around the corner with the US economy. Back to the US economic heat map, the rising inflation statistics and slowing jobs data and economic growth make me very cautious on assets like stocks. Of course, if Nvidia comes in and blasts things out of the water, we may see a leg higher, as a lot of this rally is not necessarily about what's happening in the macro, right? The inflation and jobs data, but rather the excitement around AI. So the AI trade is truly what this is all about. And so if you get smash hit Nvidia earnings, yes, we could very well continue this upward rally. But if any sort of hiccup comes into the picture with the AI trade, my concern would be that you could very easily have a corrective pullback back to the 38.2% retracement. Where does that take us? Well, that from peak to trough would just be about a 12% drawdown on the NASDAQ, which is pretty hospitable. That's really not that bad, but it does seem like a far drop away, and I think that it could come back into play sooner rather than later. Again, I'm not willing to short the market, as I've said many times on my recent videos. I'm not short the market. I'm not bearish the market necessarily, but I do think that there is room for a pullback to take place before the broader picture continues. Again, I think that the risk to reward on stocks at these levels looks very unattractive, and I would even extend that over to cryptocurrencies, which I also believe trade in line with stocks, and actually kind of in some ways you could argue that Bitcoin has been kind of leading the stock market in some ways, right? So you've got Bitcoin actually moving lower, and again, rate cuts, the excitement around rate cuts did get things like Ethereum popping higher, but the risk to reward on risk assets, in my opinion at this time, is just not very attractive. My concern is, like I said, the macro does not support a huge bull run, at least in my view. I could be wrong, and that is what trading is all about. Sometimes you're right, sometimes you're wrong. But my opinion is that the better risk to reward is in the metals and in more defensive sectors if you're a stock trader or investor. Yesterday, I discussed an oil short position that I was interested in. I'm going to continue watch it. I did not take a short position just yet, but I'm watching for a possible reversion back up towards this 38.2 to 50% retracement zone, at which point I think there is some decent risk to reward to look for short side action, especially if I think the economy is going to continue to slow. Oil prices to me have limited upside, at least for now. And again, when I say these ideas, right, I could be dead wrong. Like, you could look back at these videos a month from now and say, wow, Nick was totally wrong. The point though is that when I'm wrong, I want to minimize my damage if I'm incorrect about the market's move. And if I'm right, I want to try and maximize it. That is all trading is about, is risk to reward, managing losers and letting winners run as much as possible when trading a momentum style of trading. In the currency world, I have a slightly different approach. I do a lot more dollar cost averaging and moving in and out of markets. And I do think that something like the euro, which I took a long position on yesterday and discussed in my videos, which has pulled back to break even for me, I think that it should make a general move higher, but currencies are very choppy, right? They tend to just move back and forth, and they're very indecisive a lot of the times, as opposed to something that trends a little bit more clean. I mean, yes, the euro's had a nice trend, but look at this thing over the longer term, and you can see that the euro dollar tends to chop back and forth, back and forth. And I think we're still in the phase of kind of continuing a back and forth to the upside. So I do think that the euro has more upside to go. And so I've been buying a little bit on the pullback here with willingness to add more to my long position if we do get a reversion back to this 1.14. So I'm looking for a long position here as well. I am already long once here, looking to add a second trade on the euro dollar at that level of support around 114. But I am remaining cautious, as it looks like we've lost our bullish rating on the EdgeFinder top setups page. So if I add a second trade, I will definitely also be waiting for this to show signs of bullishness here. A quick announcement on the EdgeFinder free version. For a limited time this week, we are actually going to be doing something pretty cool. We're going to make the top setups page available for free on the website. So if you have not already grabbed a free copy of the EdgeFinder. We have a limited free version available. We are going to be making the top setups page available for a very limited time on our website, so look out for that. Sign up in the description down below if you want to try it out. And did you know that you can get a free copy of the EdgeFinder thanks to our sponsor, 8cap? 8cap has a special offer that they are doing for a limited time, which essentially makes it so that they will purchase the EdgeFinder on your behalf if you create a new account and deposit a certain amount of money within that new account. 8cap is regulated in several different jurisdictions, and if you want some information about this specific offer, head over to a1trading.com/8cap. That's a1trading.com/8cap to find out more details about this offer so that you can get a copy of the EdgeFinder completely free with your new account with 8cap. In today's podcast episode, we discussed what's going on in the markets. If you want to stay up to date with our fundamental analysis podcast, the Market Insights podcast will be linked in the description below. I encourage you to subscribe wherever you listen to your podcasts.
Now, plenty to talk about, although some of the big stories are yet to come. We've got the latest Nvidia earnings this evening, my time. We're already seeing the stock market at all-time highs. The S&P is up at its all-time high at the moment. We have an AI rally as well. So these Nvidia earnings to come are all part of that big feel at the moment, aren't they?
That's right, Johnny. I mean, this is when it comes to main event for the AI revolution, AI rally in stocks, whatever you'd like to call it. This is definitely kind of the main event. This is the Super Bowl, as we would call it in the US. This is a really important earnings report because you've got stocks back to their highs, even though we've had a little bit of wobbliness in sticky inflation data, some slowing in the jobs market, all the macro stuff that of course we talk about. But then you have this magical, mystical force in markets, which is the excitement around AI and what it can do for efficiency, for companies, and for, productivity across an economy. There's all this hype and euphoria and excitement around the AI trade, and it's all sort of centered and built around Nvidia. Long story short, with Nvidia earnings, if they guide for plenty of demand for their semiconductor products, that is a good thing to the sake of the AI rally, right? Again, if you look across the stock market, look at like the Russell, which is the 2000 index, smaller cap companies. These are not the big tech companies. And you compare that over the last few years with the NASDAQ, which is heavily focused around tech stocks and AI. The comparative difference there is the NASDAQ has just significantly outperformed, and it's largely because of the big names at the top, which are heavily centered around AI. Nvidia, Microsoft, Apple, Amazon, all these companies that are, on the cutting edge and using AI today. I mean, one of the easiest examples would be Meta, right? We're all addicted to scrolling through, Instagram and Facebook and all these things, and they're leveraging AI as we speak to make a more profitable advertising space. So as we look to Nvidia earnings, that to me is the catalyst that could either continue the sake of the rally or discontinue or reverse the rally on something like the NASDAQ, which is so tech-centric. Again, the outperformance has largely been around AI, so if it's going to continue, we want to see huge forward-looking demand. That's what it's all about. Yes, Nvidia earnings are definitely going to be good. There is no question that they are going to have good overall growth on a year-over-year basis compared to most markets, right? That's not really the question. The question is, first, can they actually beat the expectations that are high and set on them for tonight's earnings? And maybe more importantly, is projected earnings for the future over the next year. What does their demand pipeline look like? Are companies forking over tons of money to buy these semiconductor products like never before, or are they slowing their roll a little bit? That tells you a lot about the appetite for semiconductors, the ROI on chips and manufacturing of these things, and it's critical to the stock market rally that we've seen this year.
I hope that video was helpful to you, and I also wanted to make sure to share our Telegram channel with you. Every day we are posting up chart markups and analysis and in-depth breakdowns of what's going on both fundamentally and technically in the markets. We also drop bonus videos in the Telegram channel, so don't miss out. Come join our Telegram channel. The link is in the description down below. Have a great rest of your day.